Welcome to this explainer. Today, we're diving into a really hot debate right now in the tech sector between Credo Technology Group and Astera Labs. Which one is the smarter, high-speed connectivity investment for this massive AI infrastructure boom? We're going to focus heavily on their growth outlooks and, crucially, their valuations to see which of these heavyweights truly deserves a spot on your radar. Just to set the stage right out of the gate, we really need to grasp the sheer gravity of the capital pouring into AI right now. Get this, Google and AWS alone are guiding for nearly $400 billion in combined capital expenditures in 2026. That is just a staggering figure. And it's driving an urgent, unprecedented need for the picks and shovels of connectivity. Because as these tech giants race to build the biggest, fastest AI clusters on the planet, the companies supplying the critical data infrastructure, they are perfectly positioned for some incredible long-term gains. So here's our roadmap for today. We'll start with 1, the AI infrastructure boom, then 2, meet the contenders. Next up is 3, CRDO's growth outlook, followed by 4, ALAB's growth outlook. Then we'll weigh 5, valuations and market risks, and wrap it all up with 6, the smarter buy verdict. Let's jump right into Section 1, the AI infrastructure boom, supplying the gold rush. You know, as AI models scale up toward these insane gigawatt-class deployments, data centers are slamming into massive bandwidth and energy constraints. They absolutely require critical plumbing. We're talking physical cables, retimers that boost degrading signals, and complex optical components that translate data into light just to keep information moving seamlessly between thousands of processing units. Both Credo and Astera Labs are prominent pure-play beneficiaries, providing exactly this essential infrastructure. In a world where a single link instability can cause multi-million-dollar downtimes and literally bottleneck entire neural networks, this ultra-reliable plumbing isn't just nice to have. It's completely non-negotiable. Moving right along to Section 2, meet the contenders, the tail of the tape. In one corner, we have Credo Technology Group, or CRDO. They built their foundation on highly reliable copper active electrical cables, but now they're pivoting hard into optical silicon photonics to capture an even bigger slice of the market. And in the other corner, we've got Astera Labs, ALAB. Astera is all about delivering comprehensive connectivity infrastructure at the rack scale. They are especially known for their industry-leading PCIe retimers, which basically act like traffic cops, making sure high-speed data doesn't degrade over long distances. So, both are attacking the exact same massive market opportunity, but they're doing it from distinctly different architectural angles. Taking a closer look at Credo, they are a solidly established player with 750 employees globally. And honestly, their financial execution over the last few quarters has been absolutely blistering. They just posted a massive 157% year-over-year revenue surge in their fourth quarter. That single surge effectively pushed their full-year revenue past the $1.3 billion mark. That kind of rapid acceleration proves they aren't just participating in the AI boom. They're successfully scaling their operations to meet these insatiable demands head-on. All right, Section 3, CRDO's growth outlook, pivoting into optical. So how is Credo planning to accelerate its growth? Basically, by playing aggressive offense. They already dominate with their active electrical cables, which management notes are up to 1,000 times more reliable than commodity lasers for short data center connections. But they want to shed that old label of just being a copper company. So they're rapidly expanding their addressable market. They're rolling out zero-flap optics for fail-safe data transmission and OmniConnect gearboxes to seamlessly bridge different speed generations. They are fully embracing a hybrid world where advanced copper and cutting-edge optical solutions thrive side by side. And to really solidify that pivot into the optical space, they made a huge move, a massive $750 million acquisition of DustPhotonics. Bringing silicon photonics, specifically photonic integrated circuit technology, directly in-house, that is a strategic masterstroke. It drastically reduces their reliance on external suppliers, it lowers manufacturing costs once they scale up, and it allows Credo to build an end-to-end optical connectivity platform entirely under their own roof. This acquisition is a total game-changer for their balance sheet. Management expects this new optical addition to push their combined optical revenues well over $500 million. In fact, their CEO recently noted their optical portfolio could clear $600 million by fiscal 2027. They're actually predicting 2027 to be an absolute inflection point, guiding for over 80% total revenue growth for the full year. For you as an investor, this represents a company transitioning from a niche wire supplier to a comprehensive, dominant infrastructure powerhouse. Let's switch gears to Section 4, ALAB's growth outlook, expanding the market. Astera Labs is staring down a completely revitalized market landscape. Amid all these rapid AI deployments in incredibly complex high-speed architectures, Astera estimates its serviceable addressable market is going to expand more than tenfold. We're talking roughly $25 billion over the next 5 years. To put that into perspective, that is an absolutely massive runway for growth, fueled entirely by the increasing complexity and scale of modern AI data clusters. So how exactly do they plan to capture a chunk of that $25 billion? Well, instead of relying on just one revenue stream, Astera is deploying a very cohesive, multi-product arsenal. Their Scorpio product family is shipping to key hyperscalers right now. At the same time, their Aries PCIe 6 retimers give them a massive first-mover advantage. They're shipping in high volume while competitors are literally just playing catch-up. Add in their Taurus platforms for Ethernet connectivity and their strategic expansion into UALink for custom AI accelerators, you can see they've cast a heavily diversified net designed to capture every single facet of data center traffic. Which brings us to Section 5, Valuations and Market Risks, the defensive play. Okay, so we've seen the immense growth potential for both companies, but now we have to play defense. What are the actual price tags here? Over a recent one-month period, both of these stocks surged. Credo was up nearly 53%, and Astera was up over 40%. But look closely at the valuation multiples. Credo trades at a forward price-to-sales multiple of 14.98. Basically, you are paying less for every dollar of Credo's expected future sales compared to Astera's premium 20.26 multiple. Plus, financial analysts are noticeably more bullish on Credo right now. It currently holds a Zacks rank of #1 strong buy compared to Astera's rank of #3 hold. But let's be real, neither company is completely immune to market risks. Credo's Achilles heel right now is massive customer concentration. Get this. Their top 3 hyperscaler customers make up 34%, 27%, and 16% of their total revenue. Yes, they are actively expanding into emerging neocloud providers to dilute that, but losing even one of those top customers would be devastating. Astera's main risk, on the other hand, is margin drag. In this intensely competitive semiconductor space, Astera's research and development operating expenses are skyrocketing, projected to hit anywhere from $112 to $118 million. If the revenue growth falters even slightly, those heavy fixed costs are going to severely compress their profit margins. Finally, let's bring it all home in Section 6, the smarter buy verdict, by the numbers. If we're relying strictly on the numbers, Credo currently takes the crown as a statistical favorite. It's a combination of things: that incredible 157% recent revenue surge, a noticeably more reasonable 14.98 forward sales multiple, and of course that massive $750 million optical expansion. That all gives it the objective edge. It holds that Zacks rank of #1 strong buy because analysts have been aggressively revising their earnings estimates upward. Astera's estimates, meanwhile, have largely remained unchanged, leaving it stuck at a rank #3 hold. Simply put, Credo offers a much more attractive valuation for its accelerating growth profile today. But hey, the market is never static, right? As the AI landscape rapidly evolves and these mega companies demand ever faster networks, both of these heavyweights are going to be tested continuously. Will Credo successfully integrate its new optical acquisitions to outrun its valuation? Or will Astera Labs' broad, rack-scale product strength ultimately steal the lead as infrastructure just gets more and more complex? As you look at your own portfolio, we leave you to ponder, which connectivity strategy do you think will ultimately win the decade? Thanks for joining this explainer, and keep learning.